Good morning, good afternoon, and good evening. Welcome to The Nest. It's July 23rd, 2020, and we're streaming live with participants from Africa, North America, Europe, and around the world. For those of you joining for the first time, I'm Jim Chu in San Francisco, California, and the goal here on The Nest is to connect entrepreneurs in frontier markets with angel investors worldwide. We stream live every Thursday, and all episodes are recorded and available on our website, findthenest.org. Today, we have an all-female cast, 2 inspiring entrepreneurs with transformative businesses in sub-Saharan Africa, and 3 angels, all hailing currently from Cape Town, beautiful Cape Town. We'll hear all about them in a second, but before that, I have a few quick announcements. So next week on July 30th, we'll host a joint session in partnership with 1000 Alternatives focusing on East African startups. The week after that, on August 6th, we will host a session with Intellicap. And then on August 13th, we will be heading to Nigeria for a session focused on Nigerian startups. So join us for all of those sessions at 9 a.m. San Francisco time, 5 p.m. London time, and hope to see you there. So now, with that, let's cover some technical tips and get us started. So for those of you in the audience, we want you to be part of the discussion. This is an interactive forum, and we've left it open on purpose for questions and comments. So use that chat box, talk to others watching the show, make comments, ask questions. And in the meantime, use that chat to introduce yourself. Tell us who you are, what you do, which country you're from, why you're here on the show, and of course, answer the poll that's up right now. And please don't forget to use that mute button if you're not speaking. So that's pretty much it. Let's get going. Now over to the angels. Sarah, welcome back to the Nest. This is your second time on the Nest. Would you like to start with introductions?
Thank you so much, Jim. It's fantastic to be back. Thank you for what you're doing in creating this opportunity for entrepreneurs across the continent. It's an amazing.
Glad that you're a part.
Thank you. So I am Sarah Dusick, the general managing partner of Enigma Ventures, which is a venture capital fund investing in women-led businesses across SADC, so the 16 countries that make up SADC in Southern Africa.
Great. And Enigma, now that fund was started fairly recently, right? And then this last year?
Oh, we're about 6 months old, yes.
6 months old. So how many investments have you guys made since?
We've made 2 in the last 6 months. We've closed 2, and we've got 6 others in the hopper. So we're
and potentially 2 more today, right?
Hopefully 2 more today. Who knows?
Right. Well, wonderful. Thank you for joining, Hannah.
Thank you very much, Jim. Good evening, everyone. Very happy to be here. My name is Hannah. I am a principal at Southwest Capital, which is one of the largest private equity house on the continent. We manage close to $1 billion. But I'm also a partner at Dazzle Angels, which is the first South African angel fund led by women and only investing in women-led tech businesses in the country. I have also started to expand my angel investment activity on the rest of the continent. And as I teach, as I'm acting as a lecturer at the African Leadership Academy, I have the opportunity to advise a lot of entrepreneurs on the continent on various topics, including finance, operations, commercial strategies, growth, and obviously fundraising. So super excited to be here tonight, and hopefully 1 or 2 entrepreneurs will be convincing enough for us to have a look.
Great. And we were just talking earlier that you're now the host of the Francophone version of the Nest.
Yes, actually, yes, definitely host and sort of co-producing the Francophone African version of the Nest in French. And every 2 to 3 weeks, changing countries. We had an edition in Togo, Benin. Last night was in Senegal, where, again, the episode was very successful, very well attended. And it's quite moving to see a lot of French-speaking Africans saying for the first time we have the opportunity to actually learn and understand how to pitch, how to improve our businesses, how to raise money. So it's quite an interesting journey.
Gotcha. So we were just talking earlier that the English version of the Nest has raised quite a bit of money. So I think the Francophone version needs to start to catch up now.
French-speaking people talk a lot. It takes a bit more time, but at the end of the day, yes, hopefully the money will start to roll as well.
Wonderful. Thank you again for coming back for a second time. And then we also have a new angel on the show, Kindle Burett. Please, let's hear from you.
Hi, Michael. Thanks so much for, or Jim, thank you so much for inviting me on.
Some people call me Michael, it's okay.
I know, sorry. I put, yeah. So I do investing exclusively in Africa. I've invested primarily either on behalf of funds. I'm an advisor now to Financial Sector Deepening Africa Investments, or as a fund manager, or being part of a fund. But I've started doing a lot more angel investing, and it's a lot more fun doing that than, because you can invest in whatever you want. And I've really enjoyed that. So I've done investments in fintech, machine learning, health tech, med tech, and logistics. So I am really enjoying my role as an angel. And then I advise other companies that are looking to expand into new markets or looking to raise capital.
Great, wonderful. Well, thank you all three for joining the show. And I think we might have the results of the poll. Can we put that up? Wonderful. It looks like we have a pretty good representation from various parts of the world, a lot in Africa, and a bunch from North America as well, and a few from Europe. Wonderful. And even a person from Asia. So wonderful. Great. All right. So let's head over to the presenters. We have Ella and Elahor from Code Lin and Powered by People. I believe, Elahor, you're going to get started with the first presentation. But before we do that, let's go over some of the rules. Each of you will have 5 minutes, no more than 5 minutes to present, and then another 15 to 20 minutes for questions and hopefully some discussions on a deal. We will cut you off at 5 minutes, so please help us respect the time so that we can have a good discussion. Now, over to Ella.
Okay. Well, hello, my name is Ella Peinovich, and I am the founder and CEO of Powered by People. Previously, founder of the ethical jewelry brand Soko, where I built a network of over 2,500 independent producers producing 50,000 units per month and selling over $4 million in US annually. It was also there that I witnessed the massive opportunity for really taking this model of distributed manufacturing beyond a single brand to really a broader product category as well as geographies. Powered by People is the Alibaba for Africa, spearheading the future of ethical commerce. For the over 300 million creative manufacturers worldwide, Powered by People is a business-to-business technology platform connecting them to mainstream retail partners with distributed production, enterprise management, and financing tools. As an ecosystem solution, Powered by People addresses challenges across what is really a fragmented value chain, including lack of transparency, lack of market access, and lack of financing. The creative manufacturing sector, including personal and home accessories, fashion, personal essentials, and also boutique agribusiness, is estimated to grow from about $500 billion to $1 trillion annually by 2023, and yet it is 95% self-financed. Addressing this mobile-first and distributed sector, we are building an ecosystem of products and services, including a business-to-business marketplace, financing against the marketplace transactions, and also digital tools to enable a distributed mobile-first community of producers to not only participate, but compete as mainstream offering in the global retail market. Our first product is our production management solution, which leverages really a robust factory level technology with the scalability of the personal mobile phone. We are able to link all the way from a customer order from an international buyer down to the individual raw material source and all of the processes and people which have touched that product along the way. We are currently piloting this with our partner industry, which has a network of over 60,000 independent producers across India and Africa, and is a global supplier to IKEA. Our second offering is our purchase order financing, which we facilitate on our production orders using an alternative risk rating. These enablers, the financing and production tools for producers globally, really increase to then take on volume across the sector. The business-to-business marketplace then offers international buyers the ability to connect, transact securely, and also have the level of transparency of transactions that they desire. Our leadership has decades of experience and deep personal networks. We have seen a fast-paced rate of growth. Since launching our product development effectively 6 months ago, we have proven incredible traction and progress to date, with growing networks of both producers and buyers and early market fit. Since launch, Powered by People has been able to show traction across our product offering. With our retail partners, we have visibility into over $24 million in transactions each year, with 25 manufacturing businesses across 5 continents. And with our MasterCard Foundation sector survey, which we just closed this month, we have amassed a pipeline of over 500 producer organizations globally, 2 of which are now paying clients, and we are scheduled to bring on an additional 12 businesses, onboarding them before the end of the year. We are also just beginning a partnership with Founders Factory Africa, where we are hoping to develop our closed marketplace with an established retailer before the end of the year. We have a multi-pronged revenue model across our products and services within the platform. Our 2-sided marketplace, which services both buyers and artisans, we aim to capture actually a take rate of 10% on both sides of the transaction. Our financing is 18 to 36% annualized interest, but oftentimes dispersed on about a 2 to 3 month cycle. And to date, we have supported over $175,000 in purchase order value. Our technology is a SaaS subscription model with fees between $25 and $250 per month. We have a diverse and experienced team. We live across 6 time zones, 10 languages, with headquarters in Kenya, India, and Canada. And with an in-house development team in Kenya of 7 engineers led by myself. All of us are focused and passionate about building a technology for and from Africa for the rest of the world. COVID has only really accelerated our demand and the sector's demand for distributed remote production tools. And we are looking for capital to really lean into this moment and support the growth of creative manufacturing. We are asking for $200,000 in equity within a $500,000 round. Minimum tickets of $25,000 are good with us if you come with great connections. And we welcome you to join us in our mission to leverage technology and to expand the creative manufacturing sector across Africa and beyond.
Fabulous. Right on time as well. Thank you very much for that presentation, Ella. Over to the angels.
Great presentation, Ella. That was really, really good. I love what you're doing. I would love you to break down for me a little bit more how you make money. So keeping it really simple for us, explain to us the journey of, and you've got several different revenue streams, which I've followed completely. Yeah. But can you break it down a little bit more? Maybe take each one and go, you know, this transaction looks like this. Sure. We think we're going to. Does that make sense? Just break it down for us so it's a bit more, a bit clearer for us on how the company makes money.
Yeah, of course. I think this is a very difficult question to answer in a short amount of time, but I will attempt to get some progress on this.
Really simple and thinking about sort of your unit economics. So saying if we connect somebody who's making something and they're selling something, we make X. If we do this, we make Y. Just keep it really simple for us.
And it would be great to talk, so sorry, but same question would be great if you could talk about the countries in which you work, because you talked about Africa, India, but it's a bit difficult to understand where are your clients? How do they pay in dollars? Which currency? Like how it actually works?
Yeah. We are primarily focused on, similar to my last business, looking at organizations and brands from the global south, frankly. So my business partner and I come into our business with about 5,000 different producer organizations globally that we look to network into a marketplace. We are currently sourcing from around the world, but for export. So our buyers are primarily in the US and Europe, and even parts of Southeast Asia. And we are effectively able to capture the transaction coming in from US dollars and euros, and then transfer that into the local markets. One of our unfair advantages is we are, through our partnership with Founders Factory Africa, also looking to develop a partnership, long-term partnership, maybe not immediately, with Standard Bank, to also look at creating that network for facilitation of remittance and also interesting sort of financing solutions for the sector. So we are trying to really build up a number of things with regard to sort of that remittance Forex piece. On the individual revenue streams, I think this is probably the best place to start, which is on the marketplace itself. This is our primary revenue generator, which right now we're offering through more of a concierge service, and we'll launch kind of a private marketplace before the end of the year. But the unit economics on this are that we are looking at, for a $10,000 order, on each side of the transaction. So the buyer would actually pay an additional 10% on that for sourcing, logistics, quality management, for security of that transaction. So they would be paying the total dollar value of products and goods with that 10% added. We can even build that into the price of goods to make that part of the total cost. They might not see that as strictly. We then also charge a 10% to the producer organization. So of a $10,000 transaction, we would then disperse the $9,000 to that individual artisan, capturing actually what would be effectively 20% of an $11,000 transfer. This is comparable to similar systems we've looked at, where Amazon Handmade currently charges a 15% on the transaction to the producer side. And obviously they're more consumer facing, so not on the buyer side. This also, however, is a discovery platform, and it's a marketplace for individuals and buyers to find each other, where traditionally you have to work through very expensive sales organizations. In my last business, 60% of our budget went towards sales and marketing. And so I understand that if you can actually provide an alternative solution for discovering of products, you don't have to hire agents on the buyer side, and you don't have to hire an extensive sort of sales team in a US and European market. A lot of organizations would look towards this as a very cheap way, an accessible way to enter the international market. On the financing piece, right now what we're looking at is purchase order financing and also invoice factoring on the transaction. So again, on this $10,000 transaction, we currently have certain fees for banking fees, but we effectively advance 50% to the organization, to the artisan for production. And then we start interest. So on a $10,000 transaction, we actually only advance 50% of that, so $5,000 of that, and then we start accruing interest on that $5,000. And right now, we've been able to facilitate this with one large buyer in the US who's sourcing from around the world, and we disperse directly to the producer organizations in country. So then we accrue over, on average, about a 2.2 months per transaction, or around 3 months, and then we also have the transaction fees. So this oftentimes ends up being around 3% of a total transaction value, up to as much as 10% for larger production cycles. But it's actually a very accessible and affordable means of capital for organizations that want a quick turn purchase order, and they're also looking at finding fast ways to access it, but only access it when they need it, and we provide that.
So for every dollar you're getting of revenue passing through your platform, you're getting 20 to up to 30 cents in terms of revenues. Did I understand that correctly?
Just on the transaction piece, we would be getting 20 cents on that dollar, and then also with financing on top of that. And again, we're looking at increasing the transaction volume in the sector and ultimately providing more transactions. So yeah, we exactly, it's about, in this case, about 20, 25, 26%.
Gotcha, great.
Ella, go ahead.
Please go ahead.
Go ahead, Hannah.
How much money have you used to date? How was the money spent?
How much have we used to date? Our burn rate right now is around just under $30,000. We have a team, full-time team of 15 individuals. And right now it's really hiring a highly professional and expert team to sort of build out each of these different business units. So right now, yeah, our burn is around 27%. We have 7 months of runway. We have effectively raised just over $700,000, of which just over 500 of that is equity, and also a large amount of grants and some debt that we've now used for passing on to the financing as well. So we still have over half of this still remaining in our coffers.
Gotcha.
So Ella,
sorry, go ahead, Kendall.
yeah, so just one question I have for you is I mean, I really like the business model. You know, I was a little bit nervous at first when I saw that it was related to artisanal businesses, which I don't really know very well. Yeah. But then as I got into it, I realized that you have this marketplace that has some really nifty fintech and sort of mobile applications that aren't the biggest revenue generators, but are really critical to solving some of the bottlenecks you would find in the supply chain. So I really, really like that part of the business. But it seems to me, if I understand the model correctly, that I'm calling them aggregators, I guess you would call them the producers, are really the glue that holds this all together, right? And I'm curious, how do you do due diligence on those entities? And how do you, how can you determine whether or not you can trust that they're going to create the quality that you need for your buyers, and that they'll treat the artisans that supply them fairly?
Yeah, this is, I feel like, a lifetime of work. I've spent 7 years in this sector, and I have to say this is still one of those questions that, I think it's still an ongoing journey for a lot of organizations that try to work with artisans. Still today, there are a lot of what we call gatekeepers and agents who work within the sector between even producer brands and those independent producers, or even an employed producer within that value chain. So one of the things that we've done is really just said, with technology, and I've proven this out in my last business as well, with a network of 2,500 artisans, is that with traceability, with transaction transparency, you can start to actually see for the first time, where is the value being created? How is that being attributed to each of the individuals and the value creation that they're creating in that product? So with information, of course, comes choice, where they can make better decisions around the ethical compliance, which is frankly what buyers are looking for today. So the buyer market has entirely shifted recently, and I learned this within my ethical brand, was that buyers are looking for more right-sized, bespoke production of goods. They want to have a much more diversified, very unique, curated selection of goods. They want exclusivity. So what we're finding is actually there's a new opportunity for creative brands and manufacturing brands to actually meet this new market demand, but it does require that they have traceability and transparency and ethical compliance in that value chain as well, so that they can then compete with mass-produced goods. And this is one of the things that I think, again, it starts with implementation of technology and just proving it over time, that organizations are on the quality piece, that they're performing on time, that they compete on quality, they compete on timelines, they compete on volumes, and they have the compliance that is required to be competitive in the international retail sector.
Can you talk a little bit about the ask? It sounds like you guys are requesting $200,000 for 4% of equity. How did you think about your company valuation? To date, you have generated $11,000 of sales. How did you come up with this number?
Yeah, I mean, this is a big business idea. I think I'm not denying that. I attempted for 8 years building a brand to achieve the same level of scalability. I was able to prove out a lot in that. I come in with a lot of really great networks and experience and proof points. Similarly with my business partner, she's bringing in also similarly a decade of experience actually working and living in Afghanistan for over 12 years and working with artisans there. And around the world, and ultimately, we know where we're going. We know what works. We know what doesn't. We have incredible networks. We already have existing networks of investors as well. We've already lined up a number of seed series investors that will be coming in at the beginning of next year. This is really, in our minds, just a way to sort of extend a little bit of our runway to get those proof points in on the marketplace that we want to see, that we feel confident in going on in a larger valuation come kind of Q1 next year. We do have a $5 million cap. We've raised $500,000 on that. It was actually oversubscribed, and in March we were looking to raise an additional $500,000 on that safe note. But then COVID hit, and a lot of investors kind of tightened their wallets a little bit. So we have actually gone more into grants raising in the meantime, and we were really lucky to have Founders Factory come on as well in the last month. So we are really excited about really doubling our team effectively with their expert team in South Africa.
I just want to clarify some of the cash metrics. So you mentioned here you have 120 million transaction volume and 7 million of revenue for Powered by People. How much transaction volume do you need to start breaking even?
Yeah, so this again is, so on our financing right now, we have visibility into $25 million worth of transactions. At any given time, that's equivalent to about $2 million of purchase orders that we could finance if we had the capital. We've only been putting about $45,000 of our own equity money to work. And my parents put in $25,000 of that as a friends and family investment. And so we've just been cycling that through and have been able to cycle that now in a third session. That is part of our revenue. We just this month went public with our first production management tool, which has seen incredible amount of success and excitement. We have a number of demos that have been ongoing and an increased amount of interest because of the pipeline and past relationships that we've had. We have no concern about that. We've booked 2 users that are actually now paying for digitization to start using the platform from next month. So that's really where that capital comes from. As far as what we've supported in the transaction volume, we need to be doing about $120 million worth of transactions and kind of earning at maybe 1 or 2 of those different levels. So either on the marketplace or through the financing and the ERP system. On the ERP, we're looking for about 250 businesses. We would be break even. We have a pipeline of over 750. And then on financing, it's already generating revenue, and we have 1 team member who has a lot of experience who's been managing that on a part-time basis, but we'd love to bring him on full-time.
I'm really interested in the fintech piece and the underwriting.
Yeah.
I mean, I really like factoring and invoice discounting. It's an area that I've looked at a lot. And so I'm curious about how do you underwrite? And one of the things that I learned was that in looking at businesses is that, you need to underwrite on the borrower side, but also on the buyer side. Yep. And in my experience in Africa, the buyers are the ones that you need to worry about the most. Yeah. Because, small businesses have been financing the big corporates and buyers across Africa because they don't pay their invoices on time. So I'm curious, how are you doing that? And who's providing the financing to be able to do the advances and the invoice discounting?
Yeah, great question. Yeah, exactly to your point. We are effectively flipping the equation of traditional finance around to say producers generally over 70% of our network is female-led businesses. And oftentimes we find that they don't have the level of collateral to be able to go and find a traditional working capital line. And so instead of looking at their creditworthiness to draw down a working capital line, we're saying, actually, based on our production management tools, we have visibility into their performance, on their quality, their delivery timelines, the production, and actually the specific order that we're financing. We even have visibility in that from the transaction in the marketplace all the way through the production of that on the production tool. So we're able to actually evaluate them not on their creditworthiness for paying us back, but on their ability to produce. And then we look at the buyer's ability to pay, exactly to your point. One of our partners right now is the Citizenry, which is a really large online retailer based in the United States, and they're buying again from around the world. They're effectively outsourcing their financing need to us. And what we have found is that they're even willing to pay the cost of capital on top. We're saying, keep your cash. I did this in my last business as well. We were burning it on both ends. We had retailers that wanted net 90 on delivery, and we had advanced capital for production. So we see it as a big need to grow the sector is being able to figure out this financing piece. That said, who's financing us today? We're proving it out. We've had 100% repayment rate on 3 cycles now of capital. We would love to be able to grow this with a blended capital perspective. So We are actively in conversation with a number of more philanthropic individuals who would be willing to maybe be first loss partners or guarantors. I'd love to talk to Jim about this because I know that he works with an organization that does this kind of thing. Yeah, that's another conversation. But I think just being able to find more of that philanthropic capital and then blend that with more traditional finance partners and de-risk it for them from that side as well.
Thank you for that. I think over to the angels on whether there's interest.
Happy to go first. So thank you very much, Ella, for this high quality presentation. So I think the first statement is not a reflection of the quality of the company, but I think at this stage, I am not an expert in marketplaces, so it's a bit difficult for me to have a call. So I will have to pass on this one. But there are 4 points that I would like to mention where I think so some potential investors might have questions, and I think question number 1 is evaluation. I think some people might have questions in terms of to date, do you feel like you have demonstrated enough traction? And for instance, in sales number, especially given the amount of money that was raised, used to date, and given the size of the team. I think the 2 other risks that I see here are around the credit and the finance angle of your opportunity. So you've been operating for 6 months, and so 2 or 3 transactions at this date. Obviously, you don't have any non-performing loans, but I think it's a real credit risk that people might see. And I think on the commercial side, sorry, I don't remember if it was Sarah or Kendall who raised the point, but yeah, you just need to make sure that the right people are getting paid at the end of the day the right way, and it's tricky to do that. But otherwise, amazing presentation. Congratulations to you, and looking forward to see how this company will evolve in the next few months.
Thank you. Just to clarify something, if it wasn't clear before, we've cycled it through $45,000, but those are on transactions that are about $10,000 each. So we've cycled through about 13 to 14 different transactions at this point.
Kendall, Sarah?
Okay. Yeah, I think it's, I really like the business. I'm not so worried about the valuation. I think you bring together a lot of experience and talent. And you clearly have a very powerful sort of software team behind you as well. I would agree with Hannah on the credit and finance angle is really just, understanding a little bit more sort of the risk issues. And the reason I like it so much is because the fintech angle takes away the bottlenecks, which is around having cash to produce. So I would look, I just want to look more at that. And I think I have some experiences to share. And I like from the impact perspective, I really like, I really like the fact that you're trying to bridge this digital and economic divide, because one of the things I think, there's a big risk that as the world becomes more digital, that we leave behind certain segments of the population and smaller businesses. So I love the empowerment that you're doing with the tools. I think that's really great. So I'm interested in talking further.
Fantastic.
Great.
Ella, I love you. I love the idea that you're building the African version of Alibaba. I think you actually really are. And I agree with both Kendall and Hannah that the financing piece is both a plus and a minus, in the sense that there's risk associated with it. But at the same time, that's one of the biggest issues that we see for really small entrepreneurs in their manufacturing and trying to get their products to market, whether they're artisans or just small scale producers. The gap for financing those businesses when they've got a big order but now they need to fulfill it, there's a massive gap between payment, and it's a very real need. So I love that you're trying to address that and trying to figure out solutions for that, which I think is brilliant. The unfortunate part for me is I love, when I make an investment, to feel like I could add real value. and that I could get stuck in and really make a difference in your business. I don't know that I could in this regard. I think you're the expert, and I am not a retail expert, and so I don't have any big connections that would be valuable to you from a sort of a buyer perspective on the other chain. So I'm struggling to see how I could add value, which therefore makes me feel like I'm not the best person to fill some of your holes. Certainly love what you're building, and I too will want to watch this space and see how you progress.
Thank you, Sarah.
Thank you, Sarah. Let me just jump in. I'm not on the angel panel, but I'd love to talk to you further. And I think I'd be very interested in an investment, but also potentially looking at how we can support on that financing side. I think that's precisely the problem, that the CapEx or even trade financing is really the problem that we want to solve with Untapped. And so, especially if you have a digital angle to how payments are processed, we would love to be involved with that. So I'd like to talk to you further about the CapEx financing, the trade financing portion of it, but also potentially as an investor. And I think what we potentially could do is, after further due diligence, potentially round up a small group of angels to take the remaining 200K so you can get to your Q1 targets and metrics.
Fantastic.
But we'll of course have to talk about valuation and everything else. But we can talk about that later. So congratulations, and the poll is up now, and it looks like there's interestingly quite a spectrum of responses from the audience. There are a number who are quite enthusiastic. And there are some who, it's a big idea, and big ideas oftentimes,
it's hard to present in 5 minutes.
It's hard to present in 5 minutes, but also, it's that's not everybody's risk profile. So, and there certainly is an impact angle on this as well. So we just need to make sure we find the right investors.
Great. Well, thank you.
So on that note, congratulations for Founders by presentation, and my team and I will get back in touch, and for both Elor and Ella, and pull together some follow-up calls so that hopefully we can see something happen.
Thank you guys so much. Appreciate it.
Thank you so
Great.
much.
Thank you so much, Ella.
Thank you. Yeah.
Bye.
Well, I want to thank everybody for joining this call and for joining this week. And just as a reminder, we do have next week some fabulous new shows with great partners. July 30th next week, we are partnering with 1,000 Alternatives for a show focused on East Africa. And August 6th, we have a show focused on East Africa as well with IntelliCap, mostly Kenya. And then on the 13th of August, we will be going to Nigeria in partnership with Lofty Inc. So I hope you come back, hope you can join us, and we'll see you back here again in a week. Thank you.